asset investment managers. So firstly, to start off with, the last couple of months have been very volatile for the markets. From a 3,000 points fall that we had seen, we have also seen a steady recovery that has come in. So amid this kind of volatility, how are you positioning and what is your market outlook, and what should investors do in such times of volatility? Should they stick with large caps, or they can diversify into mid and small caps also if there is value?
Good afternoon. Thank you so much for having me on the show. I think last 5 years have been phenomenal from an earnings growth perspective. We have seen Nifty as a universe seeing 18% earnings compounding, and of course, markets have rewarded those earnings. I think broadly, the way we look at it is now, I think the earnings growth will converge towards the long-term average. I think last 30 years, Nifty earnings CAGR has been around 10-11%. And going forward, we expect the markets to broadly converge towards those kind of earning growth rates. Of course, there are selective themes, pocket sectors which are doing much faster in terms of earnings growth. So I think from a portfolio construction perspective, one has to do more bottom-up stock picking, identify those themes and ideas which will do well. From a market capitalization perspective, we are finding pockets of value definitely in the large cap space. Also selectively in the mid and the small cap space, we are seeing some themes and stories which have a huge runway for growth. I think the market and the economy has diversified in the last 5 years. There are several new pockets, several new sectors which have come in. The whole capex story has seen a revival, and therefore there are a lot of interesting opportunities in the small and the mid cap side too. So I think broadly we are finding opportunities across the board. As the market corrects, I think more value is getting created, and we are quite hopeful that the next year too we would see good double-digit compounding in earnings, and market returns should also converge towards that.
Right, expecting a double-digit compounding in the earnings. That's an interesting take. Hi, Varun. This is Shrishti also joining in. But talk to us about the opportunities sector-wise that you are spotting that at this point in time. Any sector that is looking quite attractive to you?
Yeah, good afternoon, Shrishti. I think first half of the year we saw some slowdown in spends by the government, especially on the infrastructure capex side. I think last few days it's very heartening to see a lot of new orders coming in on the defense side. Some big announcements have been made. I think road construction, again, we are seeing a restart. I think the government also tabled a bill for increase in expenditure, over and above what was budgeted a couple of days back. So broadly, it looks like the government capex and expenditure will come back in a very strong manner in the remaining 4 or 5 months of this fiscal. So we are quite hopeful that the capex cycle will continue. I think the private sector is also kind of chipping in. So we remain quite positive on the power, transmission, distribution, engineering, capital goods. I think some railway defense stocks have also had meaningful corrections in the last few months. So pockets of value are beginning to emerge. I think the government has been endeavoring to start up the whole manufacturing seed in India through PLI scheme. A lot of manufacturing facing sectors should also see faster growth. I think along with it, with the depreciation in rupee, some of the export-oriented sectors like IT, select contract research and manufacturing names in pharma definitely look quite attractive from a medium to long-term perspective.
And when it comes to the financial space, how's the banking and the NBFC sectors looking like? Is the worst behind related to the MFI issues? And do you see value in banking and the NBFC names?
So we are quite hopeful that the rate cut cycle is about to start. I think the last few months we saw the change in stance from RBI, and we also saw very recently a CRR cut. We are quite hopeful that come February, we should start seeing the easing of the interest rate cycle. I know next year, maybe we should see at least 50 basis points of rate cut. That should definitely be positive for financials and overall lending space. I think the worst in terms of margin pressures are also behind. This year, the banking space saw quite a bit of margin depression, and because of which we saw muted earnings growth. FY26, we expect a very strong, in fact, one of the largest contributor of earnings growth for Nifty should be the BFSI space, especially the large banking names, both public and private, and we remain quite constructive on that. And I think financial savings as a 10-year theme continues to be extremely robust and attractive. Be it AMCs, be it wealth management companies, depositories, exchanges. There is a huge runway for growth, and we believe that this decade should see continued value creation in that side.
All right, Varun, if I see the latest edition of Mirai Asset Flexi Cap Fund, then interesting names there like Hyundai Motors as well as Vare Energies. But wanted to understand that these recently listed counters, how are you betting on, how are you looking at the growth trajectory for both of these companies? I know that both of these companies are from the diversified sector, but I also was intrigued to know that didn't Swiggy excite you as well?
I think there is a lot of interesting and exciting IPOs which are coming in the Indian economy. Post COVID, I think the economy has become much more vibrant. We are, of course, undergoing a new energy change. We are shifting from fossil fuels to clean and renewable energy. So that theme will remain quite prominent and strong for the next 5 to 10 years. We are selectively positive on solar, wind, power generation companies, EPC companies, companies which provide equipment in that space. As far as the automobile space is concerned, clearly we are in the midst of some slowdown. We expect things to start improving sometime from the next, I think from the middle of next year. There is one clear trend as far as the passenger vehicle space is concerned, which is the shift from hatchbacks to SUVs, and those companies which are able to gear their portfolio towards that space are definitely a big beneficiary. So in our flexi cap fund, we definitely have exposure to companies which are able to participate on the SUV theme.
Right. Okay. Okay. Just wanted to understand one thing when it comes to the IT sector. Now, amid the fall that we had seen, IT sector's performance was quite better. Now, there are talks of revival that could happen in the US market, but at best, the IT sector could give you a growth of just 10 odd %, which is still below than what the other sectors are growing. So, how are you positioning yourself when it comes to the IT sector?
So we definitely overweight on the IT space for the last few months. Our sense is that the biggest business for Indian IT companies is North American BFSI, which has definitely turned the corner. We are seeing more discussions in terms of large deals. I think so revenue growth is definitely going to come back in the next few quarters. The only thing which is left, which is the margin side, and our sense is with the renewed the depreciation that we're seeing in the rupee, even the margins could get a boost. So overall, I think both on top line and bottom line, things seem to be getting better. The demand remains soft in Europe, but broadly in emerging economies, including the Indian geography, continues to see very robust demand. So I think for FY26, we would expect the large cap Indian companies to deliver low double digit kind of earnings growth, and the mid and the small cap space can deliver high double digit earnings growth. And definitely the sector looks quite interesting at this point of time.
All right, but lastly, Varun, if you can talk to us about the consumption space, because there has been some weakness that is persisting till date, and even the earnings expectation are not that great given the kind of Q3 updates that we are getting. But how are you betting? Would you would like to have a contra bet here, or rather look forward or look ahead of the next 2 quarters? The growth trajectory is on place?
Yeah, so I think broadly we have seen a consumption slowdown in the country. I think the rural economy is still not come back in a very meaningful manner, and along with it, we seem to have some slowdown in urban consumption also. I think our preference would be to more discretionary categories at this point of time. We like categories related to travel, tourism, hospitality, luggage. These are the spaces where we see much better earnings growth as compared to the staple companies. I think it'll still be some more quarters before the rural staples demand comes back in a meaningful manner. Until that point of time, we would maintain an underweight stance on the consumer staples space.
Right. Thank you, Varun, for joining us and giving us your perspective about the markets. Well, with that,
if you like this video, then like, share and subscribe to ET Now.